Out of the stock market, it began the week with a massive sell-off. Friday's downbeat jobs report and growing fears of a recession sent all three main indexes tumbling, with both the S&P 500 and the Nasdaq falling at least 3%. CBS's Ling Kent reports from Wall Street, which suffered its worst day in almost 2 years.
The closing bell ending a bruising day on Wall Street.
I got you. You win. I got you.
Stocks plunged on fears the U.S. economy is slowing and the Federal Reserve isn't acting quickly enough. All three major indexes closed in the red, the Nasdaq leading the declines as once white-hot tech stocks like Apple, Nvidia, and Meta tanked.
Our market probably moved too far too fast, and it's now pulling back into a range where it actually should be.
Fears of a U.S. recession triggered turbulence overseas. Japan's Nikkei posted its worst day since 1987, dropping over 12% on Monday. Driving the U.S. sell-off, a weaker than expected jobs report, a higher unemployment rate, and worries that consumers are pulling back on spending, which accounts for roughly 2/3 of the economy.
There's a generalized concern that the economy is slowing down faster than expected.
CBS News business analyst Jill Schlesinger says investors should not panic. Compared to this time last year, all three indexes are still up at least 9%.
Today looks like sort of a normal slowdown. We've been here, we've gotten through it, and if you're a long-term investor and if you're just a consumer in the economy, know that we'll get to the other side of this.
Last week, the Federal Reserve chose not to cut interest rates, meaning it's still very expensive to get a new car loan, a new home loan, and credit card debt, of course. But we did see mortgage rates start to float to their lowest level since February, Major.
Ling, is there any indication this market volatility could prompt the Fed to take emergency action?
Major, it is highly unlikely that the Fed will call an emergency meeting. We do expect that previously scheduled meeting in mid-September, though, to yield an interest rate cut. It's just now a matter of how much, Major.
With us tonight from Wall Street, Ling Kent, thank you so much.